This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago. We're looking at the grain markets. It has been a wild, volatile week, taking a little bit of a breather here late yesterday and through today's session as the market catches its breath and consolidates, which I think is healthy. We saw that capitulatory type of trade earlier in the week, which I think was the flush that the market needed to find some sort of stabilization. Now we have December corn trading right up against some key technical resistance levels. 376 and a quarter to 379 and a quarter is going to be a big pocket on a closing basis. This was the previous lows. If the bulls can achieve consecutive closes above this pocket, I think it encourages additional short covering. We could see another 10 cents on the top of these prices, get us a little bit closer towards that 390 level. From there, we'll look to reassess things. Now, moving over to the soybeans, a little bit different of a story. Obviously, a much wider of a range. $9 technically and psychologically significant support, really just below that $8.98.5 to $9.75. This has held. The markets tried to test it and broke down, but really couldn't encourage any additional pressure, which leads us to believe that this is going to be a little bit of a sturdy foundation, at least for the time being, going into the week in these oversold conditions with the RSI at levels we have not seen in a long time. Now, looking at the top end of the range, 921 and 3/4 to 923 and a half is going to be the pocket that the bulls desperately want to see consecutive closes out above. If they can do this, I think there's another 20 cents in the market, but right now we're just kind of waiting to see and make sure this $9 level holds on a closing basis to get us a little bit more excited to look to the buy side here. Now, wrapping things up with the wheat market, wheat has been holding better than corn and soybeans, surprisingly. There's still some concerns lingering about hot and dry weather over in the Black Sea region, as well as Australia, which has provided a little bit of a premium. But we also held technical support. There was a lot down there, 477.5 to 483. This is a key Fibonacci retracement on the year, as well as a 200-day moving average. We tripped below that the past two sessions, but managed to regain strength into the close above that, which I think has encouraged a little bit of short covering. On the resistance side, testing right up against that $5 psychological level. Not only that, but you got the 100-day moving average coming in right around there as well. So that's going to be something to keep an eye on. A failure to break out above that pocket, I think, keeps the bears in control, and you can see some selling pressure come back in. So that's what we're looking at to wrap up the week. That's what you should be looking at too. This has been Oliver Slope with Blue Line Futures from the floor of the CME.